Wrong one. Well, good evening, lunatics, friends, and family. We're back for another episode of the podcast. We are going to be talking about trucking insurance this evening. We're going to have Jeremy McClure, Redbeard, as some of you know him on TikTok. If you don't, go over and check him out. One of the big reasons um, that I chose in the beginning to lease to a carrier uh, rather than try to run my own numbers was insurance. It's a massive cost. It's a massive undertaking. We operate in one of the riskiest industries that you can operate in from a regulatory standpoint, and then all of the different things that you can experience with, running into problems, having cargo losses, losses to the equipment. And so there he is.
Hey,
Redbeard is in the house.
hey, I'm a minute early on my clock.
Okay. Well, you're a minute late on mine, but hey,
Damn
we'll
it.
split the difference. It's going to be all right. Um, so I was just saying that when I when I when I made the decision in 2010 to chase this idea of being an owner operator, to kind of escape the uh, the limitations of being an employee, leasing to a carrier uh, was one of the things that I just knew that I had to figure out how to mitigate risk, right? And in this industry, risk is huge. It's everywhere, all around you, all the time. And a couple of the things that I want to accomplish because I want to learn some stuff on this show from you. Um, but one of the big things is like I feel like there's so much that we ignore in this industry, especially if you've never operated a truck before. You've only been a truck driver. Having operated multiple trucks now over the years, I've seen trucks get totaled. I've seen trucks get run into, and all of the stuff that you have to go through. And I mean, I can't imagine it. We got a small fleet here that had four complete total losses, and our insurance has never gone up a penny. You
Mm-hmm.
know, so the types of insurance, right? The bobtail, physical damage, cargo liability, commercial umbrellas, all that kind of stuff that we need to understand the vocabulary of the insurance that we need, and then we also need to understand it's not just having a piece of paper that says I have insurance. Do I actually have enough coverage for when I heard a guy one time say that insurance in a nutshell is a company saying, "Hey man," or it's you saying, "I bet I'm not going to have a wreck," and the insurance company saying, "I bet you will," right? I
It's
bet you're
definitely
going.
a gamble.
Yeah, and it is a gamble. I mean, I was talking to my 16-year-old is learning to drive, and I said to him, humans, we don't quite always think about the context of of our bodies, okay? Because there's a time in human history where someone could not fathom the idea of the human body traveling 600 miles an hour through the sky,
No,
right?
absolutely.
So when things happen to this fragile body, we're sad and we're shocked and and uh and but there's dangers everywhere. We're just so spoiled now with all of the modern conveniences that we have, and then we have, oh well, it's not going to happen to me. Well, it's going to. So I want us I want to really have this be educational about the kinds of insurance that we've got to understand, the coverages that we need to have, and then how having those coverages is going to affect you in the market as you go out and try to find loads. So I guess quickly, just kind of introduce yourself, where you came from, how you got into insurance, and then we'll get on the train from there.
Yep, absolutely. So I always tell everybody, when it comes to insurance, you're either born into it or you fall into it. I unfortunately was not born into it, or rather, maybe fortunately, but I did fall into it. I used to be in construction for a few decades. My family has been in trucking, the trucking industry for, I want to say, like 50 something years at this point. My dad used to work for Schneider. He worked for Swift. He worked for CRST, GST, Covenant, and a handful of others. I've got a grandfather, uncle that did local deliveries, warehouse deliveries, etc. So trucking's always been around in my family. I've just never been involved in it. However, in the last 4 years, when I fell into insurance, I fell into trucking insurance specifically, fell in love with it. Ended up going out on my own about 2 years ago now, 2 years and a month now at this point. Actually, we had our anniversary last month.
Mm-hmm.
And I've been doing trucking insurance with our agency ever since then. We specialize in trucking. We do other types of insurance, but trucking really is our niche and what we love to do. And you mentioned a minute ago about kind of basically, it's not about when, or rather, it's not about if it's going to happen to you. It's about when it's going to happen to you when it comes to insurance and trucking
Right.
specifically. There's a reason that there are certain required coverages, but it goes even a step further than that. There's so many coverages out there that truckers need. They might not know that they need it now, but when they do need it, they're going to wish that they had it. And it becomes a nightmare if they don't. And a lot of those coverages you kind of already touched on: umbrellas, general liability. We've got, workers' comp when it comes to having W-2 drivers. That's a big issue as well that a lot of people aren't working with. Or even, worst case scenario, if you get injured, you die, you need that additional coverage. I say you die, but any driver, unfortunately perishes. You need that additional coverage, whether it's life insurance, occupational hazard, etc. There's a lot out there. You actually mentioned in a comment the other day, I haven't responded to it yet, but just in general, what I feel like as the percentage of truckers out there that are underinsured. And it's damn near 100%, to be honest with you. When you think about everything that goes into it and all the different scenarios you could come across, any one of those truckers out there could come across a situation that they aren't covered for on any given day, and they don't even know.
Right. Being leased to a carrier, I pay $32 a week for my unladen, and we pay probably a median of $110 a month for physical damage. That's it. It is so incredibly inexpensive to cover these trucks. And I get a lot of questions, of well, hey man, I just bought a truck, now I need to move it. What do I do? And I'm like, well, you don't want to move it uninsured, right? You better have some liability in case you run over somebody, and you better have some physical damage in case you run over something. But it's hard to get without a carrier relationship. And so if I could buy a truck in California right now, and if I get it inspected by a Landstar approved facility, and I send in the paperwork, the very minute they issue me a truck number, I got plates, I got permits, I got insurance. I could fly out there and drive it across the country, and I'm instantly insured. You've probably seen that one of my biggest struggles in creating content around business and trucking is people think that leasing to a carrier is somehow less than, and it's just not. It's equal to, and in my opinion, for the first time owner operator, leasing to a carrier is way ahead of getting your own numbers, especially if you've never been in business before, you've never run a P&L, you've never had an LLC, you've never filed a corporate tax return, you've never done anything in business. You're just like, hey man, I got a CDL, I know how to drive a truck, I'm going to go get my numbers so I keep all the money. Well, I can promise you that our friend, the BSE 9000, is going to tell you that is absolutely 100% not the case. So let's talk about the types of insurance. What's the ground floor there? Is it bobtail unladen, or is it cargo liability? Like what's the foundation?
Ground floor, it kind of depends on your operation. So if you're leasing on, ground floor is going to be that non-trucking liability or bobtail. We sell the non-trucking liability, not the bobtail. For anybody out there that doesn't know, bobtail is a kind of a lesser coverage than non-trucking liability. Non-trucking liability gives you a broader form of coverage and covers you in more instances. That non-trucking liability or bobtail, whichever you go with, if you're leased on with somebody, it is important to note it only covers you if you're leased on to somebody and when you are not operating under their authority. This is not a coverage that you can get, to your point, when you're trying to drive it from the dealership to your house or to a mechanic, etc. You cannot do that with non-trucking liability or bobtail insurance unless you are already leased onto somebody's authority and you have a lease agreement, a foolproof lease agreement. There's a lot of fly-by-night lease agreements out there right now written by ChatGPT. They all suck ass, unfortunately. I use AI all the time. I use ChatGPT. That does not mean that it is perfect when it comes to legal documents, unfortunately. But yeah, so that non-trucking liability or bobtail is going to be basically the least expensive coverage and the lease coverage in general, because it's only covering you again when you're not operating under authority. So if you're, running 24 hours in a day and for, 10 hours those days for that authority, the rest of the time, essentially, if you're not operating it underneath that authority, you are covered. It's going to be rare that you are covered by your non-trucking liability because of all the stipulations of when you're leased on. It's generally
liability. And I guess I should pause and say, look, liability covers somebody else.
Correct.
Right? It's insuring, it's indemnifying you against what you may do to someone else. That's what liability is.
Correct. It is helping ensure you don't get sued out the ass because you have some coverage there.
Right.
Correct. Yeah. So auto liability, non-trucking liability, bobtail liability, general liability, any of those, to your point, having liability at the end is in regards to if you cause damage to something or someone else, it covers that. It does nothing for you. It does nothing for your operation or your bodily injury or your physical damage of your actual vehicle. Absolutely. Those coverages, luckily, are inexpensive. They can range anywhere from $45 a month to, $150 a month. We typically, obviously, are on the $45 to $48 range, but that's the coverage out there. If you want to go a step further, physical damage would be that next step, essentially, just in regards to the type of coverage and the value and the cost of that coverage. Physical damage is a little bit more expensive than what you're paying at Landstar. For anybody else that's not leased onto Landstar, you're going to be looking at about 4.5% to 8% of your total insurable value. So if you have a $100,000 truck, you're looking at anywhere from $4,000 to $8,000 a year to cover that $100,000, if that makes sense.
Well, that's about, I've got my truck stated value for $25,000. So,
okay.
Because all of our trucks are paid for, right? We've got two 17s, and I think they're covered for like 30 or 35. But I want to pause on this physical damage thing because we need to talk about that stated value. The insurance company is very happy to write you a plan that says, hey, how much your truck worth? $35,000. And they will be happy to give you a premium that states, all right, here's the calculation of the value, and you're stating this thing's worth $35,000, and it burns to the ground. A $35,000 number don't mean much, right? We're going to be talking about comps. We're going to be looking at the market. We're going to see what your truck is worth. I would love to think in a market that we say we're stating the value of this vehicle, and that's what we're insuring it for. But that's not the case. They are going to look and see what the value of that truck is. Now, what our experience has been, and I'll be curious to know if yours is the same. We had an 05 when I came to work for Larry. He had just bought it. He had just put a $30,000 engine in it. I drove it. I got in it in March of 18. In October of 19, it was totaled. And I mean, she totaled it. It was destroyed. We got the full value because he was able to say, look at all the stuff that I've, I put a motor in it. We did all of these things to it. And there's a word I'm looking for. What's the word?
Receipts is the word that comes to mind for us. Just having that proof of maintenance.
Yeah, the proof of the improvement, right? Yep. Whatever. And we were able to do that. We had another one totaled where we got lucky on that one. because I was there the day the adjuster showed up and he couldn't get his fat belly under the bumper, and he just wrote $15,000 hidden damage, and they cut us a check, right? That was an '01 Classic 84-inch. So it was a rare truck, right? But it had 1.5 million miles on it, right? But they still gave us full, Gallagher. Was it Gallagher? Yeah, it was Gallagher, gave us full coverage. So we haven't lost yet on one where we were not able to prove that it was worth what we said it was worth, right? But again, the blue ribbon way of things is if it isn't written down, it didn't happen. So in a situation like this, I'm going to slap you in the face with so much data and so much proof where I listen, I see y'all out there. I see you running your trucking businesses and you ain't got a receipt. You ain't got an invoice. You don't know. You don't have the faintest clue what you've spent on something. And then when something catastrophic like this hits you, well, I had a shoebox under the bunk. Well, yeah, and it's burned up now because you don't have digital cloud storage of every single receipt, every delivery receipt, every fuel receipt. You don't have that stuff, right? So is that? Oh yeah, Rocky's here. He did have to submit receipts on the engine in that Classic because we had just put an engine in it when the guy went through 2 stop signs and T-boned a pickup truck.
Jesus.
So is our experience exclusive with dealing with Gallagher and Landstar, or is that the way it would work in the open market as well?
Let me clarify a couple things. So there are policies that are called actual cash value policies, and there are policies that are called stated value policies. If you have a legitimate stated value policy, which is rare in trucking, but if you do have a legitimate stated value policy, the way that it is written, to your point, on paper, it specifies this is the value of the vehicle. This is what will be paid out in the event of an accident. Typically, that stated value is going to be based off of if there are major customizations, additional add-ons to that vehicle that make it different than the actual cash value of just regular truck running down the road. But again, that's rare. 90% at least of the policies out there for truckers are going to be actual cash value. Even if your agent asks you what the value of your truck is, and even if they put the value of your truck in that policy, what that is doing at that time on an actual cash value policy is rating you for that year based on that assumed value, specifically assumed value, but it is not a guaranteed or an actual cash value until the event of that claim. So it could be worth $80,000 when you drive it off the lot and when you get your insurance policy. But if you get in a wreck 2 months later and the market shifts and, COVID happens or whatever, and the numbers are all over the place, it could be worth more or it could be worth less. Most of the time, it's worth less, unfortunately. So there is an issue there in regards to those policies and kind of what that expectation is. And we, as agents, try to set that expectation up front. Doesn't always work. But to your point about the receipts specifically, what comes to mind is, everybody is human, right? And most humans are lazy. I think you and I would both agree that that's the case. Yeah. And an adjuster is the same. An adjuster, no offense to them, but they're just as lazy as every other human out there. If you flood them with data and with details and with receipts, and you prove to them, or at least provide enough proof that they don't even want to go through it, then yeah, you're doing yourself a service, making sure that you're getting that value, that guaranteed value that you're expecting for that vehicle by providing all of that information. Whether it's 100% approved necessarily, if they went through it all, you're just guaranteeing that they're probably not going to go through it all, and it's going to make your job a lot easier, or rather the guarantee that you get that pay. So yeah, what y'all have experienced right now, I'd say there's a good amount of truckers out there that have lucked out. But again, it goes back to nothing is guaranteed in life. Nothing is guaranteed in insurance. I'm sure at some point, no offense to y'all or Landstar, but there's going to be some sort of a claim that comes across that's not going to pan out the way that you want, or at least start to initially. And then you have to work with the adjuster. You have to argue a little bit, go back and forth, and then get it to that point that you want it.
Yeah. Well, let's expand on this a little bit. Gap insurance.
Yep.
Is that valuable? Is that something you should be looking at, especially if you're financing a large asset?
It is valuable, and it is also rare in trucking specifically. So gap insurance is available. There are certain insurance companies that do provide it. There are, when you're getting the loan on the truck from the actual dealership, there is the option to get gap occasionally there as well. Yes, it's absolutely recommended. I recommend gap no matter if it's a personal truck, personal vehicle, commercial, no matter what. If it's available to you, in my opinion, it's worth it. I don't know your opinion on warranties, but as far as I've seen with warranties with different types of trucks and different types of scenarios, they've been beneficial as well for certain companies. But it's just about making sure that you add as much coverage as you can, as much bulletproofness basically to that policy to make sure when something does happen, you are being paid out and being effectively handled correctly. That gap insurance, being able to cover whatever that additional loan amount is that you owe on that vehicle and get you into a new vehicle, would be definitely beneficial if it's available. But I have to stress that because I see it maybe once or twice out of probably 10 policies.
When I leased a truck or bought a truck from Lone Mountain in 2013, and it was required, and I had to use, I think it was True North, because Gallagher didn't provide it at that time. I don't know if they provide it now, but the leasing company, Cresco Capital, told me, okay, well, you've got to have this gap insurance. And so I had to use a different carrier. I have railed like a lunatic against warranties, truck warranties. Number one, I hate the word. It's not a warranty. I'd be perfectly fine if you called it a service plan.
Okay, I can agree with that. You have more experience than I do on it.
Right. Because I'm not going to go on a huge tangent here, but if you go to Google and you search the word warranty, it goes back hundreds and hundreds of years through different civilizations where it was a manufacturer of a product saying, look, man, buy my product, I'll take care of you. Right. And then it evolved into this extended thing. Well, my biggest gripe about warranties is not really about the warranty. I got plenty of stuff to say about the warranty, but it's the magical supernatural view that a bunch of these drivers take. Oh, well, I don't have any risk. I got a warranty. Oh, honey child. Oh, do you have risk?
Hey, you're speaking my language right now.
You have so much risk, because I've worked in a shop, and I've watched where if somebody would have just wrote a check, the truck would have been fixed in 24 hours, but instead it sits there for a week or 2 or 3 weeks while the shop climbs the 17 rungs down into the pits of hell trying to deal with these warranty companies to get it approved. Like, it's not magic. And that's, if somebody would say, look, a warranty's $4,000, $8,000, and I'm gonna wager a bet that I can at least get the $8,000 back out of this warranty. Okay. All right. You've made a mathematical calculation. You've made an adult decision. But when y'all act like it's a damn tooth fairy, I lose my mind. Okay. Now back on the track. See, we were talking about gap. There was another place in this that I wanted to go. I should have a pen in my hand to make these notes because I didn't. I'm
just along for the ride.
Right. Well, because I want to make sure that we, here's while I'm thinking about this, Rocky says, do you think that guy that made the U-turn on the Florida Turnpike this week has enough insurance to kill them 3 people?
I don't want to laugh at
a
situation like that, but
gosh, man.
Usually if it makes the news, they don't have enough insurance.
Yeah, probably. Well, and we never want to think that the worst thing is going to happen, right? We don't want to think about that because it's a gruesome thought, of what happens if I sneeze and run off the road and run over somebody. What if I, what if I'm ill? What if I have a stroke? Like what wild, I've had a bee fly in and land between my legs and sting me in a super uncomfortable position while I'm doing 70 miles an hour. Like, wild stuff can happen to you. And insurance has become a pariah to some extent in the society because of health insurance, right? Another thing that they think's magic. Right. It's just this magic thing. Oh, well, I got health insurance. It's going to cover everything. And then it doesn't. Right.
Which you haven't had for like 10 years, right? Didn't you say that in your videos?
No. When they made it affordable, And it went from 300 a month to 1,800 a month. I went, no, no, thank you. And we haven't had any for a decade. But I'll see people, well, insurance is a scam. Well, no, it's not. Insurance is not a scam. It can certainly feel that way if you don't have enough. If you didn't do the necessary research and you did not dive in. It's like, Dave Ramsey has been famous for saying, don't ever buy anything you don't understand. And there's a whole bunch of y'all that don't understand how insurance works and what it's there for. It's there for you to hope you never have to use it, and that sucks to think, well, I'm going to just pay for this thing that I'm, hopefully I will never have to use this thing that I pay hundreds or thousands of dollars a year for. Well, if I think of the really awesome thing I was going to think about, we'll come back to it. Okay, so we've talked about non-trucking liability, bobtail. We've talked about physical damage and covering the truck. Now let's shift to talking about cargo. Okay. My understanding is, and can we use me for an example? My understanding is that when I have a load in the trailer, I'm covered by the cargo liability insurance. And when the trailer is empty, the unladen insurance is there to cover me when I'm not under a load. Am I correct?
Yes. Yes, okay. Primarily, yes.
So at Landstar, I don't pay a penny for the cargo liability. I only pay for the non-trucking liability, the unladen insurance, and bobtail, and the physical damage. I have zero cost cargo liability. If I wanted to take our trucks right now and say, okay, Landstar, thank you for your time. We're going to go get our own numbers, and we're going to take this whole fleet over and run it under our own numbers. This is kind of where I want to dig in. What's my first move as far as insurance goes? Because I've got 13, 14, 15 pieces of equipment, trucks and trailers.
Okay. So what's your first move to operate?
So if I want to leave Landstar,
okay,
with all of our equipment, yep, say, okay, we're gonna set up our own MC, and we're gonna go do this on our own without Landstar.
Yep.
What's my first move insurance wise?
Auto liability is the very first policy you're going to need in order to have an active authority. It's the very first policy you're going to need in order to drive the truck legally, in order to drive it and operate it on the road and be covered in case you hit somebody else. So okay, that's $750,000 or $1 million, depending on your operation and what the FMCSA requires. That auto liability is going to be the first coverage and policy that you need. That's what, if somebody's trying to open up their own company, they're trying to just activate their authority, just get enough insurance so that they have a company for now. Maybe a couple days later, they're going to add coverages, whatever. Auto liability is the one that basically opens that door and says, hey, I have a company. I am operational to an extent, and I can start working. Once you have that, that's when you expand into all the different coverages. What type of, are you doing dump truck?
So pause on that. So I've got 8 trucks and 5 trailers.
Okay.
Ballpark. What kind of check do you think I'm going to write for that?
8 trucks, 5 trailers. Are we talking physical damage as well?
Well, I'm saying to get that,
just the liability.
Open that door. Day one, got to write that first check. What do you think my exposure is?
Your trailers aren't going to cost you anything, so that doesn't really matter as far as liability goes. The trailers follow the truck. So you said 8 trucks?
Yeah.
On the low end, you're talking about $80,000 for the full year. That $80,000, you're looking at about 15 to 20% of that being a down payment. So paying up front in order to open that policy immediately for those 8 trucks, whatever.
I'm going to write a $16,000 check.
Correct.
And
just for the liability.
Just for the liability. So, yes. Okay. Oh, okay. So I got to write a $16,000 check for my 8 trucks. And that opens the door. All right. Now I can go complete the process. Now I've got my MC number and I want to go haul freight.
Yep.
What's my next step?
Cargo is the very next step. The bare minimum coverage in order to just get out the door and pick up a load for somebody is going to be your liability and your cargo. Standard for cargo is $100K. If you're doing general freight, talking about out the door what the cost would be, about $1,300. $900 is kind of the very low end for a year per truck. So if we assume, $1,200 per truck, what's that? 1,200 times 8. 1,200 times 8. We're looking at $9,600 for the year. Let's assume 20% down. You're looking at $1,920 up front to get that cargo running at 100K cargo for 8 trucks for general freight.
So 19,000?
No, 1,900. Sorry.
All right. So 1,900 plus the 16,000. So I'm a little less than $20,000 out of pocket to get started, but I'm looking at an annual of probably what we say 900 times.
That'd be 89,600 based on the numbers we have so far.
Yeah. So,
and that's before you even consider covering your own cost of your truck and trailer and ensuring that they're covered for physical damage, which obviously, if you've got anything worth more than $15,000, you're going to need that.
Okay. So we've covered liability and we've covered cargo for about 90 grand.
Yep.
But now we've also got to cover, and you said, so let's say the trucks are 25,000 each.
25,000 times 8, you're looking at 200,000 in total insurable value. If you get a low end policy, or rather a inexpensive policy, not low end, but an inexpensive, you're looking at 4.5% of that. So you're looking at $9,000 total for the physical damage.
So that's
on the low end.
About 100 grand right there. Just that's just that we've just opened the door, and we're automatically have opened ourselves to a liability of $100,000 for a year to operate freight. Okay.
That's also a perfect scenario. Keep in mind, I have people that have that exact operation that are paying over 200 grand because there's so many factors in there. So it could range pretty drastically.
So, because I kind of want to build this, I kind of want to build this up because we are an established business with what I consider to be one of the best management teams that you'll ever find. I mean, when you want people to operate trucks profitably and efficiently, you're looking at them, right? We can squeeze a dollar out of a dime. Okay.
Oh, yeah, with your spreadsheets.
Yeah. Okay. So here we are, this very, very well experienced, with years of track record. All right. And now we're going to say, okay, we're leaving Landstar. We're leaving that umbrella. We're going to go do our own thing. All right. Day one, we got $100,000 cost to cover.
Uh-huh.
I've got to imagine that the coverages that I'm under now are greater than what you've just sold me.
I can't guarantee. I don't know what exactly.
Well, here's what I can tell you, because I don't know exactly, but I can tell you this. Occasionally, and I saw one yesterday, driver books a load, freight bill comes in, line haul, accessorials, fuel, excess value charge. What that is, it's not money being paid to the truck. It's tied to the freight bill, and it's $152.36 for additional insurance to cover that load. You know what I mean? So it's like Landstar has their coverages, right? For cargo and stuff. But in this case, there's an extra, and so they're going to tack that onto the freight bill. Okay, so now I want to go get into business, right? I want to start calling brokers. I want to start calling customers. I want to start hauling freight. What do I have to consider as far as my coverages go, that person on the other end of the phone, they may even know me. They may go, oh man, we know Chris, we know Blue Ribbon. Those guys are awesome. They can do the job. But what now do I have to prove to them? Because I want the money. I want that high dollar freight. I want to be able to go and do your 11, 12, 13, 14 wides, just like we're doing now. Right. I want to be 14 wide. I want to be 15 tall. I want to be 112,000 pounds. Now, what have we done to our exposure and to be able to go out and haul the exact same freight we're hauling now, and I want to go do it in the open market.
Well, you've got your auto liability, you've got your cargo. They're going to be requiring that. Most of the companies, if you're talking day one, you're getting out there and you're trying to find a broker to work with you, even if you have those referrals, even if you've dealt with them before, people are dealing with you, maybe not because of your situation, how long you've been doing it, but there are people out there, even if they've been doing it a couple of years and they have those, referral partners or relationships, they're still dealing with being required to have general liability as a coverage because they're a new venture operation. General liability is completely separate than anything else we've talked about. That coverage, luckily, is inexpensive. It's roughly $500 to $1,200 for the year, and that can cover up to, I think, 10 trucks most of the time. But that general liability, what we talked about earlier, is liability covers everybody else essentially if they get hurt or if something gets damaged. General liability, conversely, from auto liability, is going to be anytime you aren't operating the vehicle. Essentially, auto liability is when you're behind the wheel and you're driving it. General liability is when you have stepped out of the vehicle and anything else. I'm not going to say it guarantees it covers everything else, but that's the scenario. Right. If you're loading something onto the trailer, if somebody trips over you or your equipment that's separate from the truck, all of that gets covered under that general liability. And that's going to be that next requirement. But even if you have all of that, if you have all of your insurance taken care of, you're still a new venture, you're still brand new, your authority's new, and brokers are going to want to see 30 days, 60 days, 90 days, 6 months, and it can be excruciating during that process.
So is there a greater cost to the insurance when we're wanting to do high, wide, and heavy?
Yes. So general freight is a very broad term, and that is basically the least expensive business class or risk. Then when you get into oversized, overweight loads, that's a different business class. Hazmat is a different business class. Auto hauling is a different business class. Occasionally, heavy machinery and light machinery may be able to be swept under general freight, but if it gets into construction, which is also a very broad term, that can be a different class as well. And there's some companies that won't cover it at all if it's considered construction. But if it's considered light machinery, it's covered. So there's some nuances there, but it definitely changes the rate depending on the type of business you are or risk you are.
So I want to make sure that I'm trying to paint as clear a picture as I can, that if you're watching this, if you've stumbled, you're just minding your own business and you're scrolling along and we pop up in front of you, I want you to understand that when you lease to a carrier that already exists and already has all of this in place, it's worth a lot of money. It's worth a ton of money. So when you think, oh, well, I go straight to the customer, straight to the broker, and I'm going to keep all the money and the carrier's not going to get any, you have to contemplate and understand, because if you come in at Landstar on day one, and I'm sure this would be the case with any other carrier, you haul hazmat day one. If Landstar gives you a rating, like I just hired a guy that had a lot of previous platform open deck experience, and on day one, he's a level 4. This guy can pull 14 wide on day one, right? I didn't have to come out of pocket. I didn't have to change anything. I didn't have to do anything differently. From day one, you have access to everything within reason. Okay. So we had a guy come to us, really, really nice kid, literally kid. He was like 19. And in the height of COVID, his daddy had some money, and dad helped him buy 5 trucks and 5 trailers. And they did okay, but they were just like everybody else, And so here's a little African kid from, I don't know, Ghana or something, right? But he's U.S., but his family goes back to Africa. But the whole thing flies apart. And a lot of it was insurance. They had, I think, 2 of their 5 trucks totaled, and the insurance company said, sorry about your luck, because they didn't update the policy with the driver. And so he ended up, he lost 5 trailers. He lost 4 trucks. He had the last truck and he brought it to us, and we put it to work. And then eventually he was like, I can't. I found another guy to buy the truck. We still have it. But I mean, this guy lived a nightmare and lost hundreds of thousands of dollars because he didn't do the insurance part right. He didn't do a lot of stuff right, but what can you expect for a 19-year-old kid, right?
Well, if he's 19, his insurance is asinine to begin with.
Right.
It's more expensive when you're under 23.
Right. Well, he wasn't a driver. He just owned
Okay.
the trucks, right? He just owned him and his brother, I think, you know.
Even then, some of the insurance companies are going to go based off the age of the owner.
Right.
It's another nuance.
So here at Landstar, if I qualify a driver, or if Landstar qualifies a driver, I've got nothing to worry about, right? Which, you know, it's no secret. And if you haven't heard this yet, Landstar's qualification process is one of the biggest nightmares on planet Earth. It takes me anywhere from 4 weeks to 2 months to get a driver qualified. It is not a quick process. It's not a painless process. And I've been here since 2014, and people are like, "Oh, you got it figured out." No. I have to walk through the same lake of fire that everybody else does, trying to get a driver qualified. I assume that part of that is to make sure that whatever driver they're bringing in is insurable. Okay. So anybody that I've ever met that buys one truck and does pretty good with it, man, if I just had 2 or 3 more. Let's talk a little bit about what happens when you get trucks 2, 3, and 4, and you start hauling, or you start hiring truck drivers. And I want y'all to remember, okay, I know you, Mr. Truck Driver, that's watching this right now. You are pure as the driven snow, and you would never do anything wrong. Okay, you wouldn't do anything wrong. But I just want you to walk through the Loves and the Pilot and the TA and the Petro, and just look around your fellow man and just realize these people, this is who you're hiring. Okay. When you see fleets or people want to grow into fleets, what are those insurance consequences?
Man, there's insurance consequences. There's FMCSA consequences. There's a lot. The insurance specifically, I would say, when you've got one truck and you're paying, say, $1,500 a month, let's say more on the high end, so $1,500 a month for insurance, and that one truck goes down for a month, and you've got to wait for maintenance. You've got to wait. There's some part on back order, whatever. It takes a month to get it back. That's a month without you making revenue that you're going to owe still that $1,500 on your insurance in order for your authority to be active. Okay. If you've got 4 trucks and 2 of those trucks go down, that's $3,000 that you've got to come out of pocket to keep that insurance active. And it just piles on top of it. The ones that I see, whether it's 2 trucks, 8 trucks, 12 trucks, is when you've got multiple that go down, the maintenance process in that and having to maintain them, keep them on the insurance, because contrary to popular belief, when a truck goes down, you are not supposed to take it off of the insurance for a number of reasons. But in general, that truck is going to stay on there. If it's down for a week or if it's down for a month, you should still be paying on that truck's insurance, even if you're not making money for it. So one of the biggest nightmares, like I said, is when it comes to the truck specifically, is paying for that insurance when one breaks down. Now, when it comes to drivers, that's another story. Driver gets in an accident, it's on your record. Driver sideswipes somebody, hit and run, gets a ticket. Any of those go on your record. That insurance goes up. It goes on your FMCSA score. That insurance goes up. You fire that driver. A lot of people think, oh, well, they're no longer under me anymore. So their motor vehicle report, their MVR, isn't affecting me. Their MVR is just a piece of it. They still affected your MC authority, your safety score. All of that still gets played in your loss runs. Some people don't even know what loss runs are out there. It's going to be your claim history, essentially, for the last 3 to 5 years with your insurance companies. Any accident, no matter what driver it was, no matter if you fired them or not, counts against you. And that every single one of those, there's different insurance companies out there that rate it differently. But if you're with some of the main ones, Progressive, Geico, Berkshire Hathaway, Canal, Great West Casualty, Shelter, all of those are going to rate you based off of the accidents, not only your loss runs, but also the MVRs. There are a few insurance companies out there that generally are a little bit more expensive than those other ones. However, they don't rate you based off of those accidents at all. You are either a pass or a fail. So you do have options out there to kind of save you a little bit, but it will end up costing you more than the cheapest option if you don't have any accidents on there. And I mean, you can't really trust anybody. You can't even trust your brother, honestly, when it comes to driving a truck. I've seen more nightmare stories with family members being involved in trucking companies than I have with total strangers.
We've got a comment on TikTok, and Trey says, I would never own a second truck. I already have to deal with one, me, and he's a pain in the ass. You know, we have said until we're blue in the face since this podcast started with Larry in 2019. Success in business is about managing risk. Okay. Yeah, we can look at our P&L, our profit and loss statements, and we can talk about how great our rates per mile are, and we can talk about how good we are at saving money and our cost per mile. But the thing that's going to determine whether or not you're in business 2, 3, 5 years from now is how you manage risk, right? I made a TikTok yesterday about this airbag situation. We blew an airbag on a Conestoga, okay, and I went through. Here's what we did, and we ended up transloading it because we couldn't miss a crane appointment. So I spent $350 for a transload to keep from spending God knows what the crane company would have charged us for an extra day, right? And I just washed that, like, okay, well, we just lost $350, but whatever. So many comments, man, just plug it and run, plug it and run, plug it and run, plug it and run. Had hazmat on it. Did I think about plug it and run it? Yeah, I did. We had that conversation. I'm like, well, did we plug it and run? And I went, hey, driver, is there hazmat on that trailer? And he went, yeah. And I went, never mind. Because I'm not going to take that risk, because those CSA points, if we get pulled over, now, could he have made it the 300 miles to the delivery and maybe never seen a DOT cop? Sure. Was there going to be any actual damage? Probably not. Was it going to hurt the truck, the trailer, the load, the highway? No. But I have to measure that risk, because if I get busted with a clearly manipulated airbag with a hazmat load, I'm done. Yep. And you can't make it's like I like super single drive tires. Okay. I like them. I don't care if you don't like them. Doesn't matter. Okay. I like them. Well, the thing I like about those is you can limp in. No, you can't.
Not legally.
Not legally. You can. You listen, there's lots of substances that you can stick up your nose. You can, but for how long is the question, right? So sure, you can limp it in until the DOT cop comes by and didn't get Lovin's this morning before he left the house. And now you've got an out of service blown tire.
You almost made me spit out my drink.
It's not worth the risk. Just pull over, call somebody, and fix it. So risk management, that's what this whole thing is about. And insurance is hedging against that risk. Okay. So let's back off of the fleet thing, and let's just say, okay, well, Chris has been in the trucking industry 30 years, extensive experience as a driver, extensive experience as a fleet manager. And I'm leaving Blue Ribbon and I'm going to go buy a truck and a trailer. So what we've just talked about as far as getting the auto liability and getting myself set up, I've got my, what's it called? MC 150, MCS what's the little
MCS 150 for your,
that's the thing that you're getting from the government, right?
That's what, you submit for,
submit that. I've got my number.
Cargo.
Okay. And for a moment, let's suspend. We all know that from 0 to 6 months, you're going to get a hard time working with brokers. Okay. Everybody, if you don't know that, you should know that. We're going to set that to the side just for a second. Maybe I've got a customer down the road here that's going to give me 3 loads a week. Right. I guess the question I'm getting to is I've got my basic coverages in effect. What about when something happens? Okay. It's time to file a claim. Again, I'm at Landstar. Well, if there's a problem, I call the claims department, and then I give them a report, pictures, and then I don't hear from them again. Well, now I'm my own carrier. I got my own MC, got my truck, got my trailer, got my coverages, got everything set up. Because I'm dealing with Geico, ran over one of my trucks in Houston, and I still ain't got a check, and that was in March. So who am I going to call to begin this process to make sure that either I am taken care of or the person that I have damaged is taken care of when I'm not going to have a massive corporate conglomerate with a claims department? What am I going to do then?
You're going to make a lot of unanswered phone calls. I mean, in general, so that's kind of the purpose of myself, of an agent, is to be that advocate on your behalf if something is going wrong with the insurance company, if a claim's not being handled appropriately, if you should even file the claim to begin with. There are a lot of times where you shouldn't file the claim. It's going to bite you in the ass, unfortunately, when it comes to the premiums, when it comes to being non-renewed because you have a claim, the limited insurance options out there once you do have multiple claims on your record. So there's a lot to factor into there. So before you even decide if you're going to file the claim, you have to factor all of that in. And it's going to depend on, the damages. Did you hurt somebody, or did you hurt your vehicle? Did you damage their car? Did you scrape their paint, or did you total their car? Like completely different scenarios. What's your deductible? Is your deductible $1,000, meaning you have to pay $1,000 before the insurance covers anything on your vehicle? Or is it $2,500? Or is it $5,000? All of that plays a factor. But to your point, like when you're ready to actually file that claim, you make that decision, you're going to either call your insurance agent and go run over all those details with them, and then they're going to call the insurance company and file that claim, or you're going to call the insurance company direct. But if anything goes wrong, if that claim's not being paid out, if that adjuster is declining the claim for any reason, you've got to go through your own sources at that point, whether it's getting your own public adjuster to try and negotiate with them, getting a lawyer to try and negotiate with them. And you don't, to your point, have that conglomerate behind you, backing you, trying to make sure that that gets taken care of.
So we had a guy spend 2 or 3 years ago, reached out to me and Larry, and he wanted mentoring. He didn't want a job. He didn't want to do the master class. He wanted mentoring. We're like, okay, we'll talk to you. Had no driving experience. None. And he had heard me say, okay, well, if you want to come do the Blue Ribbon program, go get you a job at Swift or Schneider, JB Hunt, and work there for a year, and then come over here and we can work with you. He says, man, I don't want to do all that. He said, I'm going to buy a truck and a trailer, and I'm going to go get my authority and get my CDL, and I want you guys to mentor me. And I said, well, listen, brother, respectfully, not only no, but hell no. Like, I don't want any part of this. And he was like, what it would take. I said, okay. I said, you got any money? He goes, yeah, I got a lot of money. I've had business ventures and other engines. I got plenty of money. I said, okay, you're going to take $500,000. All right. And you're going to put it in a bank account that I get access to, right? It's escrow. And you're going to pay cash for your truck, and you're going to pay cash for your trailer, and you're going to pay cash for your first year's insurance. Right. And I just made this so wild and crazy and unattainable because I wanted to drive the point home to this moron. Dude, you can't do that. The risk of trying to do this with no experience, you've never backed into a dock, you've never done any of this. $500,000 minimum in the bank. Because you're going to screw so much stuff up. You're going to make so many mistakes. So I say that to say this, to ask this question. We have told people that you need to have 40 grand to buy your truck, right? And it needs to be cash. Okay. I don't want to hear about Lone Mountain. You want to go into this business and you want to be an owner operator, 40 grand buys you a decent truck or buys you a really cheap truck that you can get ready. Okay. Then you need to have probably 15 or 20 liquid cash to cover your maintenance because it's coming. The one box is coming. The DEF problems is coming. The $9,000 automatic transmission that you have to have because you went to Schneider and got an automatic restriction on your license. So you've got to have a big nut in order to cover what catastrophic, bizarre, crazy maintenance thing's going to happen to you in the first 6 months. I think everybody thinks about, okay, well, you and I came up with earlier about 18, 20 grand that we'd have to put down on the insurance. Well, seems to me like from talking to you, well, my brain is going, well, I better have another 15 or 20 in self-insurance that if I am making that tight turn on that city street and my DOT bumper hooks somebody's fender and it's $2,500 or $3,000, I better be ready to just write that check.
Oh, absolutely. Every time.
Is there a number? I just threw out 20 grand, but do you think there's a number of self-insurance that someone should have if they're going to survive 3 to 5 years under their own MC?
If you needed, I'll say this, if you needed 20 grand up front specifically for that reason, like 20 grand at the beginning, I would say you need to get into trucking. Like that amount means that you have caused up to $20,000 worth of damage within that short period of time, whether it's the first 6 months of your operation.
Are you talking about the down payment?
No, I'm talking about the self-insurance, having that nest egg in case you want to pay for damage to somebody. I'm saying if that's going to happen, if that's even a possibility, you shouldn't get into trucking. That means you're causing major damage that, pretty quickly and soon on. So that's just, erroneous number. I would say that's too much. If at the very beginning, I would say having at least 5,000 set aside, but then every quarter adding to that. So if you have that 5,000 set aside up front for that self-insurance just in case, and then every quarter you add another 1,000 or another 2,500, and then you get no accidents, then sure, after your first year, you have that self-insurance set up to that 20 grand or whatever it is for the future, and you never have to touch it again. Okay. But again, if you're having that up front and you're expecting the possibility at all to cause enough damage in that short-term period that's going to be needed at the very beginning for that self-insurance, that would be a major concern to me. But
okay. So to review that, it's my position and it's my recommendation as a person who has owned a single truck leased to a carrier and now operates multiple trucks leased to a carrier, that if you want to become an owner operator, you need 40 grand cash, buy your first truck. If you insist on going and getting your own authority, all right, you probably need somewhere between 10 and 20 to cover your down payments for your insurance. And then you need at least another 5 with plans to build that up to 10 or 15 over the first year for self-insurance outside of having to use your insurance. Okay. So we're talking 40, 60, we're talking almost $100,000. Okay. And I see a comment. Oh, well, you can't finance a used truck. Well, yeah, you can. You can finance a used truck. I don't recommend it.
It's hard to do it if you buy it from an auction.
If you're going to do it, then find a truck that you can finance for 3 years or less with a payment no more than $1,000 a month. Okay. Which if you'll match with that with some cash, and if you have zero cash, you have absolutely no business being an owner operator, period, leased to a carrier or not. Okay. You're going into business. That's somebody asked me, I think it was in a driver interview. Why we have the numbers that we can show, right? The profit and loss, the rates and all this stuff. And I said, because we run a trucking business the same way any other business on planet Earth is run.
Yep.
But in trucking, we're lunatics. We're stark raving mad because we run this business the same way my buddy that builds custom homes, that builds bathrooms that cost more than my house. Well, he runs his business the same way that we run ours. But it's such an anomaly in trucking because all they can think of is, I have to have a new truck. I have to have a $4,000 a month truck payment. I have to get my own MC number because I'm not a real owner operator if I don't get my own MC number. Well, you can be real bankrupt too. So go ahead. Have at it, brother. I mean, I love that. And there's even one here right now. You're not an owner operator if you don't have your own authority, my view. Okay. Congratulations, buddy. But what have you proven?
I don't agree with
Nothing.
that. Yeah, owner operator means you own the truck and you operate the truck. That's the kind of the definition of it. Has nothing
Period.
to do with your authority.
Right. And if you're moved by that, well, man, I don't want some guy at the truck stop that I'll never meet that I wouldn't like if I did meet him anyway to think I'm not a real owner operator. Come on now. Have we graduated the 7th grade? I mean, have we moved beyond the schoolyard bully tactics where you're going to make possibly hundreds of thousands of dollars of decision that can destroy your life and your finances because some 7th grade bully told you weren't a real owner operator because you leased to a carrier? Well, if you can be moved by that, please stay away from the truck dealership, because you're just go ahead and call the bankruptcy attorney and say, listen, I don't need you right now, but in about 18 months, me and you are going to need to have a conversation. So let me just go ahead and pay the retainer while I still have money, because I'm surely not going to have any 12 to 18 months from now, because I'm going to be so broke I can't pay attention. And release. That stuff fires me up. And it's the one when people talk trash about the industry, I feel like y'all talk trash about the wrong stuff. Like y'all don't bat an eye at trucking companies paying drivers on 1099, robbing them blind. Y'all don't bat an eye at big carriers leasing trucks to drivers and getting them to drive the trucks for free. Y'all don't bat an eye at that.
Lease to own programs are predatory.
It's insane. It's mathematically insane. It's practically everything about it is insane. Y'all don't bat an eye at that, right? The stuff where people are actually doing stuff to harm other people, y'all don't care about that. But a broker makes 3% more than you think they should, and you lose your damn mind. You know, it's insane. But this industry lied to me for 20 years, you know, about really how to build value for the customer, and how to turn yourself into a money printing machine where you can go. I mean, I know a guy ain't moved in 2 months. Now, when he moves, it's 30 grand for one load, right? But he's been sitting at the house for 2 months. Well, you want to get there? You can. But let me explain how you're going to work like an animal for 5 to 10 years before you get there. Y'all cut your nose off, spite your face every day. And then you're mad at all the wrong people. And then you make stuff up like this guy in the TikTok comment. Well, the broker's making 50%. No, they are not.
Hey,
gosh, I know that sounds good. It sounds good, and it make your thumbs just get erect. And I just can't wait to take the broker's getting 50%. But it's nonsense based on nothing. You heard it from somebody, and it sounds good, and it confirms your existing bias. But honey, it's not true.
Let me talk on this a minute, because this touches so much on the insurance aspect as well. Trucking in general, I won't say it's built on lies, but it's like a social media presence when they're talking to each other, when everybody in the industry is just spreading these rumors from person to person to person. My buddy had this experience with insurance. My buddy had this one. And in reality, their buddy doesn't even exist. They've just talked about it so much that it's turned into something it's not. So one of the issues, I don't know why it's happening. Actually, I know exactly why it's happening. I'm not going to name drop him, but if you want to go check my videos, you can see exactly who I want to talk shit about right now. But they are now spreading not only that brokers are making 50%, but insurance agents are making 50%. 50% just seems to be the number that they like to use. If I was making 50%, oh my God, I'd be making so much money. But that is not how much we make. Insurance agents on average make 10% in general. And I say on average because it fluctuates from 7% to 12%. Like 12% is like the top tier. So 50% is just asinine. But on top of that, you haven't probably dealt with this because of the way that Landstar's insurance works, at least since you've been with Landstar. However, the rumors out there about Progressive or about any of these other insurance companies, Progressive is the main one that gets the flack right now, about them not paying claims, them refusing claims, brokers no longer wanting to work with Progressive because they don't pay claims. I'm not going to say they don't pay or they do pay claims, because it's there's ratios, there's percentages. They're going to pay
Right.
some, not pay some. Progressive in general has been the largest operating trucking insurance company over the last decade. They have the largest percentage. I think they have 70% currently, or at least 60 to 70%. I can't remember where that fluctuated last year. However, those numbers mean they're going to have the most claims. They're going to have the most non-paid claims. They did previously have issues with flatbed claims on tarp loads with dampness, wetness, and rust, which were not covered. And one of the biggest issues was agents were not accurately describing that to their flatbed truckers. So to your point earlier, an agent can say whatever they want, but it's about what's in writing. And on Progressive's policies, it was in writing that wetness, dampness, and rust was not covered. So thousands of claims weren't being paid out. And now it is boiled into this situation where, first of all, Progressive's changed that. They now have a Cargo Plus program. So for anybody out there that's afraid that Progressive won't pay a rust, dampness, or wetness claim, it is literally in writing now that it is covered. Now, that also goes to say you can't be negligent as a truck driver.
Right.
You can't rip the tarp off or have some terrible tarp job,
Right.
or using some old tarp that has multiple holes in it and expect that to be covered. You have to operate as a genuine business and take care of that. But it's just rumor after rumor after rumor that spread and turned into different scenarios. And now I have people on my videos, when they hear of a claim not being paid out, they are all saying, one person says Progressive, another one says absolutely it was Progressive, another one says Progressive doesn't pay claims for this reason or that reason. And then when I call them out on it, they're like, oh, that's just what I heard. I'm like, yeah, you just heard it from you or the other person in the comments. That's not how this works.
I always get the, well, my buddy was at Landstar and he went broke. And I'm like, so your buddy's an idiot. and you just repeated what he said, because obviously, the thing that gets me about brokers, or the conversation around brokers and rates, and other things too. The one person that y'all always leave out of this conversation, the customer. The customer is the one paying the bill. Without the customer, I mean, you can die on the hill of, without truck drivers, we do. Okay, fine. You're an important cog in the wheel. It's a big wheel, real big wheel. Okay. And you're one of the cogs. That's for sure. I don't deny that. I was one. But do y'all really think the customers, especially big ones with bean counters, rows and rows and rows and rows of cubicles full of bean counters, are that stupid that they're going to let a broker charge them X number of dollars to get them a truck, keep 50% of the rate? Do y'all really think that American corporations, global corporations, are that stupid? I promise you they're not. I promise you they're watching those broker commissions very carefully. Because I don't know if y'all thought about this, but the customers can see the load to truck ratios that the brokers can see, and the information that the carriers can see. And so the customer, if the broker comes to them with an outlandish rate and they look around, that broker, Steve, Anik, our friends, Brandy, that are brokers, they know that their relationships are in jeopardy if they start giving the customers BS rates that are based on nonsense. And so we have all of these truck drivers that stare out the windshield and believe everything they think. And look, y'all, I get it. I went to an American government school, graduated in 1994 without a clue, right? I wasn't in any better position than any of the rest of you were. We didn't talk about finance. We didn't talk about economics. We didn't talk about any of that stuff. And it's even worse now. Now they can tell you, how many pimples Kim Kardashian's got on her rump, but they can't tell you, what the load to truck ratio is and what that means and how it affects rates.
Hey, don't judge me for counting those pimples.
Y'all, it's business. It's just business. And one broker posting a load for $1,750, another $2,800. How do you explain that? Who cares? Know your cost. Know what you can do and what your value is, and call them and book it for whatever's reasonable for you. Who cares what anybody else does? I clearly established that for the second quarter of this year, we had an operating cost of $1.66. If I go haul a load for $1.67 and I make a penny per mile off that load, that don't affect you. It's none of your business. Am I going to go book loads for $1.67? No, I'm not, because our average rate per mile, all miles for the whole fleet's almost $3.70. In a market that's $2.25, but Landstar sucks and has cheap freight. I mean, y'all, can we get out? There was a guy. What did he call it? He called it the ring of knowledge at the truck stop counter. We always call it the liar's counter, but he called it the something of knowledge. It was hilarious. Why do we in 2025? We have all of the world's known information at our fingertips. All we have to do is be curious. How's that work? Well, let me go find someone who has actual experience and ask them, hey, how's that work? Why did you make that decision? Why do you believe that thing? And then shush, and just listen. You'll find out in 30 seconds whether or not they're full of crap. Just ask them why and hush. Oh, because one of my good friends, a chiropractor, buddy of mine, he says, never argue with idiots. They'll drag you down to their level and beat you with experience, right? Which is pretty much, my comment section. I'm sure yours is similar. It should be evidence used for the prosecution to shut down every government school in America immediately and permanently, because the real basic information that people ought to know about the industry that they work in, and for some reason they're completely incapable of, and not even, I don't know if it's humility, or, to go, well, maybe I don't know what I'm talking about. Maybe I just did make that up, or maybe I did just believe some other guy. Maybe I need to change me.
I don't think they have that self-awareness.
Yeah, that's a good, yeah. Okay, so let's review. So we've talked about the different levels of insurance. We've talked about how you need to know not only that you have coverage, but you have the right coverage. That if your mistakes are going to be not costly in the hundreds, they're going to be costly in the thousands,
possibly hundreds of thousands.
Maybe even $1 million, right? That's another thing that since the ambulance chasers got their pound of flesh out of the tobacco industry, and they come out of the courtroom, man, they are happy, and they look over and go, ooh, trucking.
Mm-hmm.
Yep. And I told Phil this today. I said, dude, we got a hell of an operation here. We've got an amazing team. We got good drivers. We have amazing relationships. We have the ability to make a ton of money here. It terrifies me at the idea of taking our operation out from the safety and the warm blanket of Landstar and putting in, as good as we are, and I will die on that hill. This is one of the best management teams you'll ever find. Terrifies me at the idea of going, okay, we're going to leave Landstar and go out on our own. It's insane. I can't even imagine trying to do. And then could I take my drivers, my equipment, and my management team and go out into the open market and get an average of $3.70 a mile? Ain't no way.
Yeah.
Could I get fuel at the cost that I get it? Not a chance. Could I get insurance at the cost that I pay for it? Ain't no way. So if you have ever looked out that window and thought, man, I would really like to try my hand at being an owner operator, I encourage you to do it. There's no greater liberty and autonomy on earth than self-employment. There's also no greater danger.
Dude, it's terrifying.
And that's what the gurus, all these gurus that light you up and gaslight you with their flashy TikToks and want to tell you how easy it is.
Don't get me started on them.
You know, the one thing you're not going to get on this particular program is a line of BS to tell you how easy it is, because it's not. It's the hardest thing you'll ever do. It's worth it. It's absolutely worth it. But to try to act like, oh, it ain't no big deal. I'll just go buy a truck and a trailer and get my own numbers and everything's going to be great. No, it's not.
Or worse, people trying to do it part-time.
Oh yeah. Yeah. Or hot shot.
Hey, I have a lot of hot shot clients. All right.
I don't hate on hot shots for the same reason that a lot of people do, because they're not real. That's not my issue. I did hot shot 1999. We bought a brand new 3500 Ram. We bought a brand new 48-foot trailer. And we put 105,000 miles on that truck and 3 transmissions.
Jeez.
Brakes after brakes after brakes after brakes. And I look around and I'm going, you know what? Sleeping in a pickup truck sucks.
Oh, God, yeah.
Okay? It sucks. I mean, we built the platform. We had the mattress, the whole thing. It was awful. So then I look around and I'm going, my buddy went and bought an old Kenworth T600 and paid half of what we paid for that 3500 Dodge. And he had a sleeper. And he went and pulled a 48-foot trailer and leased it to the same company that we had the hotshot truck leased to for the same rates. And I went, this is insane. Why would I spend? And now, I mean, that Ram then was 35 grand.
Oh, it's 80 plus.
What you going to pay for one of them now?
Yeah.
So to me, don't blame me for hating on hot shots. Blame the bullshit Eliminator 9000. Okay. Cause that's my problem.
Hot shots do really well with multiple loads.
I think it's great for really, really niche stuff, which is out there. Probably, I'm assuming in Texas, places like that where there are
like their partials too.
Yeah, really cool opportunities. But please don't just think, oh man, well, I'm gonna go get me a Ford, and it's gonna be awesome. No, it's not. It is not. Okay, so let's go. I am a big proponent of blockchain and cryptocurrency. Where are you at there?
Oh, absolutely.
Okay.
Have been since COVID.
Okay. So I've always kind of wanted to ask this question of somebody that knows insurance. Okay. So now listen, we're going to talk crazy here for a minute. So don't let y'all's eyes glaze over. Okay. But we're going to talk about some wild stuff. I believe, number one, the trucking industry will be the industry that proves the concept of blockchain and crypto for contracts.
Ooh.
Identity.
Yeah. Double brokering would be gone.
Gone.
Yeah.
Like that. Gone. Okay. So we've got identity fixed. We've got contracts fixed. We have reputation. Because listen, if you're a dirtbag and your dirt baggedness gets logged on the blockchain, you're done. The chameleon carrier thing is over. Okay. Insurance in a blockchain crypto world, to me, seems like a no-brainer. Because if we're going to, because what fascinates me about blockchain is I think, okay, if we're trying to forecast, what do we think the rates are going to do? What do we think capacity and demand, blah, 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 blah. We always have to go backwards. We got to look at 30 days, 60 days, 180 days, 1 year. Well, what happened last year? What happened last September? And how are we going to prepare? Blockchain would give us the ability to go, well, okay, right now, there's all the trucks, and there's all the loads. It's an instantaneous measure of supply and demand every minute of every day, instantly. So if insurance is about that actuarial table and measuring what the projected risk is, then what we would be doing for contracts and currency, by the way, because I don't know if some of y'all paid attention, but there's just about double the number of dollars in existence today that there was 5 years ago.
And we don't even, I'm not going to get into that.
I saw a great meme. It said, it had a picture of $100 bill and it said, I bought this shit coin in 2020 and now it's worth half. Anyway, some of y'all will get that.
Do you believe the gold is in the reserve?
Probably.
Okay. We don't need to go down any conspiracy.
I'll say this about gold. If what I think, which y'all is based on nothing. Okay. So, but if what I think will happen is that Bitcoin and precious metals will stand against one another as a measure, as the store of value, and then there's a million currencies that all index off of that kind of precious metals and Bitcoin, and then I think we've already seen it with Truck Coin Swap. Or have you met those guys?
No, I've heard of them, but I haven't.
What basically, in a nutshell, what Todd has done with Truck Coin Swap is presented the opportunity for you to be a carrier and you get a receivable. Okay. Now, right now, what you would do with that receivable is you would either factor it at 3 to 5%, you would quick pay it, or you would bill it and wait for the money. Okay. 60, 90, 180 days. What they've done is they'll take that receivable and they will convert it. They will load it on chain and they will convert it to their coin.
I think you posted a video about
so
that.
Then you have a choice of convert or hold. You can immediately convert it to dollars. Okay. Or you could hold it, or you could trade it on, the exchange. Why am I Coinbase? You could exchange it for Cardano or Bitcoin or whatever you wanted to do, right? Ethereum. Okay. So what they're doing is giving you the opportunity to take that receivable, convert it to crypto, and then immediately convert it back for zero fee, right? And I think it's 1% now, but eventually would be zero, because if you understand blockchain and crypto the way I do, as the more activity there is on that chain, the more currency is created. So eventually running it on chain becomes a net zero because the coin is growing as this activity is happening. So there's no reason to keep a portion of your activity is the exchange. Okay, well, you're allowing us to process this contract for you, and our reward for that is the growth of our coin, right? But the ability for us to know your we're talking about know your customer. They got all these stupid know your customer laws, right? You want to know who your customer is. Run it on chain, right? And then there's no question whatsoever. I even see a wild future where carriers don't own trailers, right? Trailers are owned by somebody. Customer says, "Hey, I need a trailer on Thursday." Somebody comes and drops a trailer. Carrier then they say, "Hey, I need this load moved to Chicago." Carrier comes along, bobtail, backs into it, scans the QR code on the trailer, leaves the destination, is tracked on chain all the way. They pull into the place, geofence hits them, paid on chain. Like, there's so much waste in deadhead, in currency devaluation, in interest payments, and all that kind of stuff. So I was always curious what you think blockchain can do for insurance.
Honestly, insurance is outdated, and I feel like it's always going to be outdated. And if blockchain, let's assume blockchain gets into trucking in the next 10 years, insurance probably won't do it for another 30 after that, unfortunately.
Right.
COIs are outdated. The process of a COI, I don't know if you've seen some of my videos lately. I'm
What
complaining
say what a
constantly.
COI is?
Certificate of insurance, there's that proof of insurance that you have cargo, that you have auto liability, that you have physical damage, whatever the case is. Brokers require that COI. They require to be listed as a certificate holder. That COI doesn't tell you the whole story. It doesn't tell you near enough. We've talked about being uninsured, not having enough insurance. You could have a COI that shows auto liability, but is that auto liability and cargo for cars? Are you auto hauling? Is that for construction material? Like, what does that actually cover? And there's nowhere on a COI that is even mentioned. On top of that, we're listing VIN numbers on COIs, drivers, and they're not instantaneously interchangeable. We have to make adjustments, manual processes. All of that, if we were to go to the blockchain, would be, to your point, immediate. As soon as that broker is ready to get that load, they can see this is the VIN, this is the truck, this is the coverage. Not only do they have cargo, but they have cargo that covers automobiles, covers this, covers that, covers this, and it's all guaranteed by that blockchain. And if the insurance company makes any adjustment, or they change a process, or something's no longer covered, or there's an endorsement where a truck's removed, if it's all connected with the blockchain, again, instantaneous, all done in that exact moment. Because if I send you a COI right now and it says that this person's covered for X, Y, and Z, and they go pick up a load 20 minutes later, that COI could not be accurate at that point. They could have called and made a change. There could be a number of things that go on. And a lot of these brokers, and I mean, whether they're using a system like Highway or it's just directly to them, they're getting a COI and then they are never checking again to see if anything has happened. They have some guarantee that they require a 10-day cancellation notice, 30-day cancellation notice, but they aren't guaranteeing that the same truck is on there a lot of the times. They aren't guaranteeing that because they were covered for a certain type of cargo previously, that they are still covered for that same type of cargo. And if they are guaranteeing it, unfortunately, that comes in the form of the phone call to me, which is annoying as hell. I get tired of having to talk to brokers all day. Yes, they're covered for this. Yes, they're covered for that. If we had some sort of a process, to your point, the blockchain, where it was all just immediately and in detail exactly what was needed, that would be amazing.
Right. Well, that's the thing about decentralization. Okay. I always use the example of, you'll hear a story, the Target was hacked or the credit card company was hacked. Because I get this in iCloud. You should change this password. It showed up in a data leak, right?
Well, I got a Coinbase one today where somebody was trying to scam me by calling them on WhatsApp to provide them my Coinbase code. To your point about Coinbase earlier. So yeah.
Right. Okay. Well, we're so comfortable with the idea of centralization of power in the government, centralization of data, right? We're giving it to Facebook, we're giving it to Google, we're giving it to TikTok, we're giving it to all of these companies, which has huge value. That data is worth probably more than anything else on earth right now. Well, the centralization is the problem, right? Did you see the movie Walk the Line?
Yep.
The Johnny Cash movie?
Yep.
I thought about this when he's trying to get that song and he goes to, was it Sam Phillips in Memphis, right? And he's standing there, and in order for someone to hear his music in 1950, whatever, he had to go to a guy, and then that guy had to have access to someone with a distribution network, right? And so he's standing there trying to sing and play for the guy, and wants to get the guy to record it. And then the guy that records it can send it to the company that has the centralized power and the power of distribution to send that out to radio stations and on and on and on. Well, dude, if I could sing, I could do it right now. And the potential for 1 billion people to hear it is there. Now, there's 116 on TikTok and 14 on YouTube. I promise y'all I'm not going to sing. Okay. I can play guitar and piano, but I don't sing. Okay. There was a time in history where all of those centralized networks were absolutely necessary for humans' innovation and evolution to move forward. Well, now we're at this weird tipping point where the centralization's becoming a problem. We need decentralization. Okay, so imagine, I live between Huntington and Charleston, West Virginia, and I always think about, okay, a truck gets unloaded in Charleston, a truck gets unloaded in Hurricane. Well, truck A is connected to so and so's TMS or broker, and the other one's connected to this other TMS, and there's no way for them to connect, and so they pass each other, deadheading to pick up a load that this guy was 150 yards from, and this guy was a mile and a half from. But there's no way, because they're connected to different centralized TMSs or brokers, and then they pass each other. And there's this wasted 55-mile deadhead where if the customer could have known that this guy was 150 yards away, well, why not just call him? And what if I could pull up a decentralized blockchain-based TMS that goes, well, there's a truck. Oh, and he's got a reefer. And he's got 4 years of experience, and he's got this, that, and the other. Oh, look at all of his insurance coverage. It's instantaneous, but it has to be decentralized. That's kind of the kicker. It's like we have to burn it all to the ground. Not literally, right? But a lot of things have to fall. A lot of things that we're comfortable with have to go away in order for that next evolution to come along and give us stuff that we can't even fathom or dream of right now. And it just seems to be there's something in human DNA, that we hang on to stuff for way, way, way too long.
We dream about change. We dream about change, but we never want it to happen.
Right. And then it's like the baby, sitting in a diaper. It's like, well, I know it stinks, but it's warm and it's mine. Don't take it off, but I need to take it off, because if I don't take it off, you're going to get infection. Right. But I don't want you to take it off. I mean, it's just, it's crazy that we do that. And then of course, those who have the establishment, well, they don't want it to go away. So they're sure as hell going to do everything in their power to keep that from happening. I stand on my belief that this is the most exciting, amazing, profitable, wonderful time to be alive in all of human history. It ain't never been as good as it is today. And tomorrow's going to be better. And that's a choice. That is a simple choice for me to go, okay, I'm alive on the third rock from the sun. And there's challenges. I grant you that. There's certainly challenges. Nobody's going to question that there are challenges, but every one of them is overcomable. But it's you. It's the guy in the mirror or girl. It's you. There's nobody else going to do it for you. There's people that'll help you. I'll help you. Jeremy will help you. But you got to stay out of our comment section with, you don't know what you're talking about. Okay, buddy. All right, sugar.
No, I like making videos off of your comment section. It gives me good content.
Yeah. Well, I'm trying to pivot a little bit with my content, because there's a long time, you get stuck in 200 views, and then I just kick the hornet's nest and I talk about fuel taxes, 1099 versus W2, and that the algorithm.
TQL. If you mention TQL, it blows up.
Yeah. And then, but it's like I recognize that the algorithm demands drama.
Mm-hmm.
And if I don't give the algorithm drama, if I just want to make a nice, sweet, well put together, fact based, they don't care.
200
They'll
views.
never see it. And that's kind of the.
It's exhausting too. It's exhausting to have to play into that.
Oh, it is. It's crazy. But I'm trying to balance it. I've been blocking and deleting. Somebody comes at me with a legitimate question, I will answer that. But if you're just gonna slobber all over my comment section, you're out. I'm not even, and I'm not gonna let you poison my comment section either. There's a guy there's a guy that has popped up here in the last couple of weeks who is rallying all the troops together. And I believe that people are right on the verge of finding out who this guy really is. He's not your friend.
I'm wondering if I know him.
Well, he's a company driver, but he started this movement. We're going to all go over to we're going to go over to Telegram, because great things happen on Telegram. We found that out in 2020.
Telegram and WhatsApp.
Yeah. Listen, if somebody wants you to go to Telegram or WhatsApp, the answer is no. No, thank you. I'll pass.
They just want your social.
Huh?
They just want your social security number. It's no big deal.
Just give me your bank account information, your social security, and then give me lots of money, because I'm going to fight for you. I'm going to, there was a dude that it was a couple years ago, and they were going to, I've got 1,000 trucks coming to Washington, D.C. 4. He had 4 trucks show up, and he wasn't one of them.
I know what you're talking about. I know exactly what you're talking about.
He was trash talking his people. I can't believe y'all didn't show up.
Well, then he explained why he wasn't there.
Yeah. Well, I wasn't going to go until I was sure y'all were going to go.
I remember that.
Y'all, listen. You got to finally tune your BS detector. Okay. You just got to do that. No, not that guy.
I see that. Yeah.
Yeah. Not that guy, but he's on there too.
He's close.
It's you. If you succeed, it's you. If you fail, unfortunately, also you. You are the answer to all of your problems. It's not Trump. It's not Biden. It's not Congress. It's not the FMCSA. It's not the latest guy that's going to rally everyone to get a union. And it's not happening, y'all. It's not happening. Okay. Well, hour and 37 minutes. We've covered a lot. Anything else that you wanted to bring to the table that you would like? Obviously, we need to put out your, let me switch this right here to Jeremy's web address is on the screen. What else you got that you'd like to leave the audience with?
I guess 2 big things that I haven't really preached about as much in my videos, but when it comes to insurance, when it comes to trucking, know that there are agents out there, trucking agents out there that are legitimately in the business just to get the money. That is all they're doing. They will sell you whatever BS they want. They'll tell you they're a trucking insurance agent, but they only have access to Progressive. They'll tell you that they know what they're doing, but then they won't get your filings done. Don't believe anybody out there that just says that they are a trucking insurance agent or they're there on your behalf. The reason I post the videos that I post is to educate and to guide. I don't sell. I mentioned that multiple times. I do not push. I do not pressure. But I want you to know that if you're coming to me, you're coming to me for the right reasons. I'm going to provide you a good service. I'm going to provide you exactly what you need. And we are not going to sell you some shit policy that hopefully in the end, doesn't, or rather does do you right. That's pretty much it. I see people, they'll go to Progressive, they'll go to Geico, they'll go directly to a company, they get a 100 number, they talk to some random person, and then their policy falls through, their authority falls through. They had a authority for 3 years, and now they've got a brand new authority because somebody screwed up the process. So you can't just trust anybody with your business. And what you mentioned a minute ago is, and kind of what I talk about in my videos, is you are responsible for your business, for the success and failure of your business. I don't care if you hired a driver that was the best driver in the world and then they got in an accident and caused millions of dollars in damage. You're responsible for that. Yep. You hired them. You didn't know they were going to do that, obviously. It's not your fault, quote unquote, that happened, but you are responsible for the way that your business was ran and taken care of at that point. Same with brokers. If you deal with brokers that you claim are terrible brokers, that are lying to you, that are taking 50%, quote unquote, you are responsible for the brokers that you work with. Now, you might feel like you're restricted and have to work with X number of brokers based on your authority. That's true, but you're still responsible for the choices that you make and the result of those choices. That's the biggest thing I think I have when you're starting out in this business. You mentioned it multiple times. When you become a trucker, you are a business owner. You are not just a trucker. You are not an owner-operator. You own a business, and you have to run it, and you have to be responsible, and you have to mitigate those risks accordingly. That's kind of my whole spiel.
And I think that is a perfect way to end the show because that's what it's all about. Success in business is about mitigating risk, and you have to go and find the answers. Like I said before, if you run into one of these insurance agents like Jeremy's talking about, then ask them why and hush. You'll find out. You'll find out really quick. Well, we should be back with you next Friday night for another episode. I'm going to try to scrounge up a guest, or maybe I'll drag Phil in here kicking, screaming, and we'll talk about platform stuff. Until then, check us out on TikTok, Facebook, YouTube. We're all there. Go follow Jeremy. Is it at Redbeard or?
It's at Redbeard_TX, or now after today, it's also at Redbeard Trucking 1. That's
Okay.
our new channel as well.
Yep. Yep. This is, yeah. So, if you're watching now and you want to come back and watch, it will instantly be available for replay on YouTube. So yeah, that's it. We'll see everybody next.